Hey, what's up everyone? Welcome back to another very much needed update to the altcoin market. Starting off with XRP. This coin, in my opinion, is still very well on track to higher levels in my opinion, as we are still looking at it from a macro perspective, and I'm going to explain it where it branches straight from our previous video 2 months ago. Yes, it has been 2 months. And as always, please make sure to hit that like button, subscribe to the channel if you haven't already to show your support. Thank you very much. Now, if you take a look at the previous video, we discussed two possible scenarios on how this range could be resolved. First things first, our impulse scenario, which was our primary idea, where we were expecting a straight 5-wave move to the upside, is now invalidated. But one of the biggest primary alternatives that we were talking about, and is now arguably the more bullish route, is most likely in play, that is observed as a flat idea. Now, between the two scenarios, the impulse scenario was more of the instant gratification approach, but the second scenario was more of a rip the band-aid off approach first, then move up. And we're now kind of concluding and wrapping up the scenario as we speak. So if we dip below far more significantly than these levels suggest, then there's no more bullish alternatives at that point, in my opinion. That I can say with confidence because we have to remain neutral on the macro as much as possible. So the bulls have their last chance here to prove themselves using the more bullish alternative. Now, I'm going to explain on how we can achieve it. And although it's through the lens of the Elliott Wave Theory, and the way I'm theorizing on this is that it's also viewed from a way that removes all market inefficiencies that many people are not seeing, and it's by using what is known as the line chart, which I'll show in just a second. Now, the markets and everyone participating in it, you and I included, is most likely used to seeing just the candlestick chart like you see here, and that's what we should be using as well 99% of the time, as it offers more complexity due to the amount of data presented. It shows even the wicks. But a few weeks ago, we had one of the biggest market inefficiencies in recent times to occur that caused a major price discrepancy when it comes to interpreting the data, primarily the closing price for each period, and also a wide percentage net loss against Bitcoin. Many altcoins fell 50 to 70%. This is what I meant by ripping that band-aid off before we move up type of scenario. Now, through the eyes of the Elliott Wave Theory, again, this drop was probably incredibly difficult for many Elliott Wave analysts to interpret. When you are zoomed out like this, it still does, however, resemble what could be known as an expanded flat idea. It's pretty objective if you ask me. It's where you see an established range. But when it comes to making sure we show the proper internal wave counts, there has to be measures on combating this without being too creative and wild with your wave counts. I think there's a lot of people trying to label a wave 1, 2 of some sort, like different ways, but I really don't like to do that. I think it's best to keep it as simple as possible. And the simplest way to avoid this is to see this as one larger established range as the base idea, an expanded flat or running flat idea. It makes sense because XRP has been trading in this range for 1 year straight. And this to me means that it's clearly in a distribution play for the upside and not to the downside. Not only was this drop necessary to flush out the markets, but the massive recovery we had moments after that drop, this move to the upside, was the true blessing in disguise, in my opinion. Now, since a final component of a flat, as you can see for the C wave, it requires 5 waves. It's almost impossible to fit a 5-wave structure into this. It looks like it's more of a 3-wave move when you're looking at it from a line chart or a candle chart perspective. Now, one way to do this is by, again, use what is known as the line chart, as I said earlier. And if you do that, if you go here, you can see how everything changes in perspective, and we can see how the markets actually truly behaved. So if we pull up the 4-hour chart, we get a better perspective on how things played out without that wick. So if we pull the line chart like this and we zoom in, as you can see, the wick is now completely removed. And you can see how it cuts out the noise entirely and shows the closing prices far more efficiently and how the markets probably should have behaved. It's absolutely ideal for identifying the macro trend, in my opinion. It makes large-scale Elliott wave structures easier to see when it becomes more complex on the macro as well. So the macro bias, the line chart provides better clarity. And since the line chart also is in line with the candlestick chart on the macro that we want to kind of prove that a macro expanded flat is playing out, this helps solidify that. We can now have a clear way of seeing a 5-wave structure for the final component that we were looking for that we mentioned for the flat. This is that C wave that requires a 5-wave move to complete off the structure entirely. So what does that mean? I think we're very, very close to a macro bottom now that we're kind of utilizing that alternative scenario that we discussed a few months ago. Now, it does get a bit more complex because the flat idea does come in two different variations with the current data, with one price extreme for this wave B. And you're kind of boiled down to, or you can now conclude, this pattern is going to be ending either as a running flat, which could be right now as we speak, and we just get out of here, or an expanded flat that moves us a little bit down further, and then we move up. Now, the running flat, if we were to complete now, is a bit rare, where the price finishes before breaking this previous low, and is very, very rare actually, but it is very possible if we're seeing it from a macro perspective. And one way is the expanded flat, where it breaks the previous low. Both are fake outs because a running flat is where the market's reversed without notice before that breakage of that previous bottom, and the other is where it breaks the prior major low, but it also reverses, establishing a larger range. Both are pretty much more or less a similar idea. It's just the rarity of the patterns and how the markets behave. But the most important thing is how we can kind of conclude and create these subwave counts. In my opinion, we can see that even this is now becoming clear as a leading diagonal going into wave 1. We have an established wave 2, 5 wave into a 3, most likely as a 4 here. Wave 3 is longer than wave 1, so this is valid even though wave 5 may be longer and is becoming longer. Then it's pretty clear that we do have an established 5-wave move that we're looking for, like I said. And if that's not the case, there are different ways, in my opinion. I do have a way of counting this where this may end up as kind of an ending diagonal of some sort for this wave C, as an ending diagonal could be occurring for a wave C entirely. There is very differently a possibility, probably an ABC into a WXY here into a wave 1, 2, 3, 4, 5. That could end us here where we start to lose a lot of selling pressure here, and then we move up. So this is definitely a possibility where there's going to be a lot of fake outs for this final component, and that's fine. And it's absolutely fine, and that's what gives us that confidence to possibly get into XRP more if that were to occur. But we don't have that data right now. But with the current data, we do have what could be a possible completed low here, and we do a fake out and we move to the upside. But since Bitcoin is still showing the possibilities of lower levels, there is definitely a possibility for this expanded flat route as well. So it's something to keep in mind. But like I said, the clarity is within the larger macro count, ladies and gentlemen. So if we go back to the candle chart, you can see it does have an established range here, and there's definitely a possibility that we're still going to be going to the upside, and that's the key point, as we're now using the context of literally everything that is given to us from a price action perspective. So hopefully that was helpful, and congratulations. It has been about 1 year since we have been discussing this entire range. I mean, we did discuss the move to the downside and to the upside, but unfortunately, even though that impulse scenario didn't play out, the blessing in disguise is that now that we have ripped the band-aid off, there is a more bullish interpretation that could be leading us up into even the $20, $30, $40, $50 range. So hopefully that was helpful. Thank you very much. Please make sure to hit that like button and subscribe to the channel. We are offering also a Black Friday discount sale for the Discord memberships. So please don't hesitate to reach out to me using any of the links in the description below. If you'd like to join the Patreon membership, there is an easier way to join at a monthly flat rate. So there's a kind of a way for anyone to join and get a taste of what I offer as a service. Thank you very much. I'll see you guys in the next video update. Have a fantastic rest of the week. Bye-bye.